Hi, my name is Alex Carlucci with Gustan Associates. Going to talk to you about part-time income, bonus income, self-employment income, all that other weird income that's not traditional W-2 salary 40-hour-a-week jobs. So if you are working part-time and your part-time income is declining, the underwriter has the option to say that your income is not stable and they cannot use it. So be careful of part-time jobs. Try to be working at least the most hours you have been more recently and not declining. Part-time income can be very, very dicey. It's an underwriter's call. When it comes to overtime, if you have overtime, let's say you made $50,000 last year in overtime, and then let's say the previous year, is made $50,000, and last year you made $20,000, and you're on track to only make $20,000 this year, based on the math, then they're going to go off the $20,000 overtime income. They're not going to average it. But if you've made $20,000 the prior year and $50,000 in last year, and then your year-to-date looks like you're on track to do 50 again, they'll average the 20,000 and the 50,000 and they'll add them together, divide it by 2, and they'll give you that average. So if it's declining, they're going to go with the worst case scenario. If it's increasing, they're going to average. Same with bonuses, it's the same thing. Now, if you're self-employed, it gets worse than that. So let's say you have a large decrease in your employment, your self-employed income. Let's say you made $100,000 in adjusted gross income in 2017, and in 2018 your adjusted gross was $40,000, and they're going to use the $40,000, and they could render that $40,000 useless, and that $40,000 would be the best case scenario. But they could say you're going out of business. They could say this looks like it's going out of business. They might ask for an account. They might ask you to file your current year-to-date with the IRS and show that you're actually still stable. Their CPA has to write letters. So self-employment income, if you're declining more than 20%, they can render it useless. You like to stay within the 10% range. They won't even ask any questions. So if your declining income is only going down by 10%, that's your best case scenario. They don't ask questions. If it's more than 10% into 20%, it gets gray. Over 20%, they can render it useless. So declining income is bad. If you're W-2 and your income is declining, you can just write LOXY. There was cutbacks at the company. You took a different job and they didn't pay as well. We can use whatever your current income is. So that's good to know. If you're working hourly and your hours vary over the last 2 years, they're going to average your hours worked over the last 2 years by getting verification of employment, and they're going to hopefully see that you're working consistently with that average and you're not varying on a declining way to utilize your varying hour income. So some people work 30 hours and then they work 35 and then they work 26 and they work 33. So hopefully the year-to-date doesn't show that you're hovering around 25-hour weeks when you've in the past been working a lot of 32 hours and 35-hour weeks. That could also affect your ability to use that income. So again, more complicated stuff here. If you got any questions, leave the questions below. Please like this video and share it, and thank you very much.